See, here we have learned the basis for allocation of certain expenditure to each department. In these cases, certain expenditure is there which cannot be allocated, which has purely financial in nature, which cannot be allocated to the particular departments. Those expenditures are, see, 1, profit on sale of investments. On what basis we have to declare that? We have to apportion, so that unproportionable expenditure, unallocable expenditure can be recognized directly in common profit and loss account. Okay, now types of departments. You can see types of departments. 1, independent department. 2, dependent departments. Clear? So what are these independent departments and dependent departments? In case of independent departments, they act as independently. They can purchase their own stock from outside and they will sell their items to their customers only. Here in this case, interdepartmental transfers are very less. Interdepartmental transfers. So in case of independent departments, interdepartmental transfers are very less. In case of dependent department, interdepartmental transfers are very huge. In this case, what we have to do? So whether interdepartmental transfers are done at what price? So there are transfer pricing is there. The price says 1 at cost. This transfer may be done at cost or at ruling market price. Ruling market price or existing market price, or at cost plus predetermined profit. See clearly, if the interdepartmental transfers are made at cost, there is no unrealized profit. We need not worried about this, because we are transferring our material to our department X to department Y, or department first floor to second floor, without cost, without profit. They are transferring at cost, so there is no unrealized profit. So no unrealized profit will be erased. In case of remaining 2 cases, if the goods are transferred to their interdepartment at ruling market price or at cost plus predetermined profit, then unrealized profit on stock, closing stock, will be erased. So if this material laying in stock in inventory, in that cases closing stock contains certain goods transfer from interdepartmental transfers. In that, on that closing stock, we have already added unrealized profit. So this unrealized profit to be eliminated. Unrealized profit to be eliminated. Any profit is made on this interdepartmental transfers to be calculated and eliminated. That calculation will be seen in the profit problems. Okay, so how to eliminate this? How to eliminate this? We have to transfer that unrealized profit to stock reserve account, and next year we have to nullify that stock reserve account. So what are the entries? Entry for journal entry for JV, that is journal voucher entry for elimination of stock reserve. See, what is the entry? The entry is, first what we have to do? We have to debit to profit and loss account, debtor to stock reserve. Why we have debited profit and loss account? Suppose, see, X transferring their goods to Y in X sales. The interdepartmental transfers also included with profit. The sales are already recorded in P&L account. Therefore, we have to reduce that effect by debiting profit and loss account and crediting to stock reserve. This stock reserve to be shown in balance sheet by reducing from inventory. Understand? So, unrealized profit should be transferred to stock reserve account. The stock reserve account to be deducted from inventory. But by debiting this profit and loss account, for which purpose? We have to reduce this profit and loss profit effect from sales of that particular department. Therefore, we are debiting profit and loss account to debit and crediting to stock reserve account. This is at the end of the year. End of the year. And next, beginning of the year. Beginning of the year. Beginning of the year, the entry should be reversed. What is the entry should be passed? Stock reserve account debtor to profit and loss account. The previous year's stock reserve to be transferred, reversed, this entry will be reversed. So this stock reserve account to be debited and the same amount to be transferred to profit and loss account. This is the entry for elimination of unrealized profit. So I already told, unrealized profit means any departmental transfer have loading with profit or containing the closing stock. On the closing stock we have already loaded, that loaded amount will be transferred to stock reserve account. So at the end of the year, profit and loss account to be debited and stock reserve account to be credited. The stock reserve to be deducted from inventory in the balance sheet. In next year, the same entry will be reversed. Stock reserve account to be debited and profit and loss account will be credited. Okay, these are the entries for elimination of stock reserve. And then, now, what are the benefits? What are the benefits for this maintenance of interdepartmental accounts separately? What are the advantages? What is the necessity to prepare like this? See, first one is advantages. Advantages of departmental accounts. First one is evaluation of performance. Evaluation of performance. So, evaluation of performance. We can know